Recording. Here we go. Welcome to the Salties post-market review. I know it's a little bit later than my normal broadcast, but I've always wanted to do something. I'm going to try it now. Good morning, Vietnam! All right. All seriousness, I love Robin Williams. He's my all-time favorite actor. I was very sad, disappointed when he left this world, but many of his movies will always be my favorite. So, let's look at what happened today. Let's just change right into the NASDAQ. If you haven't noticed, I've had my peanut butter whiskey recently. That's some good stuff. Actually, you know what? I need some more. I'll be right back. All right, we're back. Now, by no means do I condone drinking or think that you should be going out and drinking. But, you know, there's just times that having a nice little drink isn't too bad. It's enjoyable. It's fun. But let's get into it. So, the NASDAQ. What do we got going on tonight with the NASDAQ? Well, what do we have going on in the intraday? What do we have going on in the post-market? Let's look at all this. Let's see. So we got the 1 minute and the 5 minute going on. So we had the rise up. You know, we had a recovery from the previous devastation from yesterday. And then we just kind of continued to slough off a little bit into the post-market, continue to slough off some more. Oh, that's not what I want to do. There we go. So you had some risers and some falls, but overall, I mean, if you look at, we're higher than we were in the pre-market from the beginning of the day, which is a great thing. So let's start playing some of my music. So set up for tomorrow, it's hard to say what's going to happen. We're below VWAP right now, and you know, we started coming back up a little bit, but we're not making higher highs and we're not making lower highs either. So we're still in a bear market, potentially to be continuing going to the downside. So let's jump into SPY, the S&P 500s. Kind of similar, usually kind of relates to the NASDAQ a little bit, but in this case, if you look over here to the post-market, we're actually crossing above VWAP, which is a good indication that bulls are recovering a little bit. And so we might be seeing an upside tomorrow. We'll just have to keep an eye out. Today, because of other activities, I didn't get a whole lot of trading going on. I actually got 2 trades in today. One trade I got in on, what was it? Where was it? AST? No, I did 3 trades actually, but one of them I pulled out of and didn't make anything on. What do we got? Hi, I'm new to stocks. Any I should invest in, as I heard and seen that market was down today. First off, I'm not a financial advisor, so I can't tell you what you should invest in. What I can say is that yes, I do agree that the market has been in a bear market. It was worse yesterday. We had, if you look at just like, for example, everyone's favorite right now, right? NVIDIA. So Nvidia, what was Nvidia yesterday? Nvidia was down 7%. It was one of the biggest losses of a company in a single day, and I think ever. Now, Nvidia dropped 7%, and then it dropped about another 1%. If I remember correctly, it was another 1% today. Looking at it, though, on the 5-minute, it looks like it kind of just from post-market or from pre-market to post-market, you had a run up, but it ended up just kind of averaging out. So you didn't really gain anything or lose anything. I actually got into a long position of 5 shares at the close of yesterday, and nothing really happened today. I mean, in total, I'm down like $10. Right now, I'm going very light in some of these heavier stocks just because the market's undetermined really as to what's really going to happen. We can go back to the NASDAQ, so we'll use TQQQ as an example. Let's just look at the past 20 days for an hour. We had this big just drop earlier 20 days ago and bottomed out, and then we had the rise, but now we're dropping again. I mean, there's a good chance we're going to continue that. We've had this rise up, the fall, the rise up, the fall again. We tested this support down here. We bounced back up, but we didn't make a new high. So technically, we are on a lower high, which is an indication of a bull market, or a bear market, excuse me. So yeah, that's kind of where we're what we're looking at right now. So I would just say be cautious. Let's see. So let's go back to here. 5-minute. Some of the things that were moving today. What was the top mover today? Let's see what the top mover today was. We had SHPH. And that is not one I had on my... oh, wait. Hold on. What do we got? Yeah, I bought a share of Tesla. I'm up by $1. I hope it goes up, but it's so expensive. Well, let's look at Tesla. What do we got for Tesla? I mean, it definitely jumped. I mean, it depends on when you bought it, because, I mean, if you bought it at the close of yesterday, you would have gone up a couple bucks instead of just one. You would have risen up a couple bucks, but then it did drop back down. So from close $10 all the way up to close of today $19. So technically you had $9. So if you bought one share, there you go. You got $9. So I'm surprised you only have $1. That means that you technically bought. Oh, get out of here, fly! You bought the. Just hit the fly and it smeared all over my screen. It's lovely. You technically would have had to have bought right down here maybe, and rode this $1, or maybe a 218 rode $1. It just depends on when you bought it. Let's get back to looking at SHPH. Is it SHPH? Yeah, SHPH. That was the market mover for today. A lot of people, I mean, unless there was some news, there had to have been some news right around here, because you had a bear market going on, continuation, and then all of a sudden just a massive jump. Maybe there was some type of split. Let's see. What's the news say? What time was that at, that jump? That was at about 10:35. At 10:06, they had trade gap widens in July. I don't know. You really didn't have anything at that time. So, but hopefully that answered your Tesla question. By the way, I just want to continue on looking at some of the market movers for the day. So, I wasn't in on this one. As I mentioned, I only had a couple trades. One was ASST. ASST, I was in and out. I played that as a scalp because it was just really wavy. I missed the initial move at the beginning, but I did catch a little bit of this run here, and then I got out. I don't like playing longs below VWAP that often unless there's a clear sign of an uptrend. And here there really wasn't, because you had no higher highs. It was just longer lower lows or higher lows. So, or I would say, higher lows. There we go. But anyways, cheers. So, yeah, so I played this just for a quick scalp. Got a couple bucks. That was about it. It was very little money. CYN is another one I jumped in on. That one was moving early on, and I think it ended up flushing down throughout the rest of the day. So I got to keep some music on, or I'm gonna lose my mind here. And for awareness, I'm the one that produced all the music in the background, so I like to listen to my own stuff. So, all right, so yeah, so this was a pre-market play for me. I played in the pre-market, caught this run up right at the opening at 7 o'clock. Caught the run up, took advantage of it, got about 160 bucks. And then I got out, and then it just flushed, and it just continued to flush. And once it was down here and consolidating, I didn't play it anymore. It wasn't worth my time, and I had other things I was doing throughout the day. And then the other one was SMCI. SMCI. Let's see. I only took 80 bucks from that one today. So very small. You could say small range of gainers today because I didn't have a whole lot of time to actually play the market. I mean, I think I had a total of like 15 minutes to really play the market today, in combination of everything. This was another earlier play for me. I got in when these rampings were happening, right when it crossed VWAP. I got into this one, rode this up. As soon as I saw this red candle starting to form, I saw some weakness kind of forming. I'll zoom in here. So, you kind of had this flush that happened. I was already in from here. I saw this, I was out. That was it. I accepted it, I took my money and ran, made 80 something bucks. So, it was like 80.07 is what it ended up being. So, and that's what I played today. Other than that, I mean, that's really, we had a couple other honorable mentions. I mean, VRAX dropped tremendously. So, that was a market player for the past couple of days. And then ALZN was hot for a little while, but then it also flushed back down a little bit. So you had a little bit more volume movement going on here in this earlier intraday section. FFIE also moved. So unfortunately, it did the early morning, jumped all the way up and then flushed back down, and then it took a long time to get back to above VWAP and back into play, but that didn't happen until after at the close of the market. So that's what we're playing and looking at. So what do you guys want to talk about now? You want to talk about indicators? You want to talk about some of my indicators, what I use, how I actually set up my trades, and what I'm looking for? Why don't we do that a little bit? Since I got some time, we've already gone over the post-market stuff. And I'm just, like I said, having my little bit of peanut butter whiskey and enjoying my evening a little bit. And, got the, I'm not sure if you guys see it, but the beautiful Capitol building behind me. And it's kind of a ways away. So, and you got the reflections, you can't really see it. But let's turn that on too. Holy crap. We got some lights now. So, how do I read my entries? So, as many other, you could say, stock trader advisors kind of lay out is, or you could say Ross Cameron, Ricky Gutierrez, we like to look for what we call confirmation. We like to look for things to confirm that they're moving in a certain direction before we really make an entry. How do you find these shares? All I know are the basic ones like Apple and Tesla. You have to use a stock scanner. You have to set up a stock scanner. You can actually go on YouTube, and if you research YouTube, you'll find, depending on what platform you're using and what stock scanner you have, you can scan for stocks for certain criteria. You can scan for low floats, set up certain criteria for low floats. So let's pull up one of my scanners here. Let's do this, and we'll go. Okay, so like right now, I wrote a salty overbought and oversold scanner. I'm gonna drop this up here so hopefully we can see it if I can move it. Oh no, I don't want to cancel that, or don't want to close my system. All right, if you can see that, this is a stock scanner. This is on Thinkorswim. This is the platform I use, and so the salty overbought and oversold limit. What I'm looking for is any stock that's over $20 during the intraday. And actually, I just have it as marked, so it can be pre-market and post-market as well. And then I also have how much volume. I don't want things that are less than $1 million in volume, or $1 million, a million volume, because a million volume is my key to make sure that there's actual volatility going on, that things are actually moving and performing. Shares, I ended up restricting that initially, but then I just widened it out. So technically, you don't even need that. I could actually delete this, and it wouldn't change the actual scanner at all. I was playing around with that initially. And then you have a custom script that I wrote, and it's based off of RSI, and so it's determining when things cross into the RSI of being overbought and oversold. And if I can grab it here, let's see if I can grab it. Nope. And so, like here, this is the actual script that I wrote. This is for ThinkScript, and I don't mind showing this sometimes because sometimes it helps people that are trying to learn how to script themselves. And what it does is it identifies when the relative strength index is at a certain point above being oversold. The shares are oversold versus overbought. So you'll have a high and low limit. And so I want the scanner to tell me when those are occurring. And so if we go over to my scanners and we select personal, these are all my personal ones that I've actually, all these ones have written scripts in them. And I had to teach myself how to code in ThinkScript and PineScript. And it's a form of Python. So if you know how to script it or write coding in Python, you can probably learn this fairly simple. But Salty's overbought and oversold, you throw that up on the watch list, and it'll pop up and tell me exactly where some of these things are. So like the first one, ASTS. ASTS is showing that it's either overbought or oversold levels. So if I come back here to, let's move this back out of the way, and we will click on ASTS. And if we come down here, you can see actually on the RSI, well, this is the MACD, but I also have an embedded RSI coding that I did as well, where I have a green dot index. So if you zoom really in, you see these dots on the upper side and the lower side. It's actually showing that it's overbought. So there's a potential when it's overbought for things to reverse and go the other direction. That's just how the stock market likes to function. I gotta get some music on in the background. Let's see. So we're overbought here. And this is the post market. So there's a good chance that maybe things will start to flip the other way. I mean, it's not a guarantee, but there's a possibility. And you use that in combination to a couple other indicators. So I said the MACD is one of the indicators I use. So this is the MACD with the RSI levels, the RSI levels being the dot matrix. And the MACD, you have the direction or the impulse. And, well, it's basically you have the direction of the trend on a MACD. You also have the impulse. And so those are the things you're looking at. The strength impulse as well. And these are code that I wrote myself as well. So it's not something you're going to be able to find. I mean, you can find a MACD indicator, but you can't find a MACD with impulse indicator that shows the strength of a direction as well. And usually, so for example, let's pull up, it'll be just easier, so we do NVIDIA. So as you can see on NVIDIA, let's go down here, when the MACD turns to green, I can't really see it on this one. I don't like this one. Let's see. Let's go over here. Maybe over here. There we go. When the MACD bars flip up to green, usually it means an upward trend. But it also, you're looking for the actual MACD directional change as well. So if you go right into here, you can see that the directional change is to the up. You see that the bars flipped over, but this might be too late of an indication. So I'm looking at, well, the directional change is showing strong here, and the impulse, the strength of that direction, is also showing to the up as well. So if I see this and I see this forming, that's a good chance that it's a good possibility for me to make an entry. Now, what's going on right there? At the same time, if you go straight up and look at this bar, well, yeah, they had a high here, but a lot of selling pressure to push it back down. But that also means that there was a lot of buying pressure too. And then you see another green candle forming. You have VWAP right here, so it's crossing VWAP, which is usually a trademark indicator of when it's going bull versus when it's bear controlled. So you have that going for you as well. So you have not only this is confirmation showing that you have a next higher candle of a high going on. The trend is going up. You have your Heiken showing up here where these are your Heiken bars where it's showing the volume of what the spread is. It's buy and sell. If it's shrinking, that's also an indication that maybe the trend is changing. As you can see from these ones over here where the volume is more kind of directional, still getting wider into that direction of the actual trend. Until you get over here where you see it turns back to purple, if you can see it that well. I know it's really far, really close to get in there, but I can't zoom in anymore, I don't think. There you go. So it turns purple here, but you already see a downward trend forming because one, the boxes are shrinking, they're getting smaller. But you also have the directional trend of the candles. You know, this sale candle, even though this was a positive to the up, doesn't pass the previous, and the next one that opened was a downward trend as well. So there's a bunch of things you're looking for. Now, if you're also looking down here, you're looking at your volume. Your volume, and I wrote this code as well, this advanced volume bars. It shows you how much of buys versus sells were going on. And so you're looking at, okay, well, let's line it up. Okay, we have a green candle after a red candle, but still not enough volume of a green to put it a buys to put it above the previous for confirmation. You have a downward trend in red going on. I mean, there's just indication after indication. So you use all those things, and once you get a strategy, and it starts to form really quickly. And the best thing to do is just make a checklist. And so the one thing I look at, let's try to find something that's clean so we can look at it. Let's look at this spot here. And in that same spot, so this is on the 5 minute, and in that same spot, it's right about here on the 1 minute, and we'll pull that up. So we have the 5 minute and the 1 minute. You can see the upward and downward, upward and downward, upward, downward, upward, downward. So what you're looking at is you're looking at the Heiken. Is the Heiken going up? Are the candles, are you making higher highs here? If you had here, you had shrinkage going on in the Heiken as far as these boxes. So the strength of the trend is decreasing, so it's potentially going to reverse. You have your impulse and your MACD also shrinking. It's going into, it's consolidating, as they say. Your MACD bars themselves are going from red to green, so they're shrinking in strength here. Once it turns green, that potential good time to get in. And then you're looking at your RSI. Is your RSI overbought or oversold? It's not. So there's a chance that you might have continuation of the trend because you're not at those peak, high, and far above, far and below levels, which can support your continuation play of a direction. And then you also want to look at your actual volume as well. And that's why I like my volume bars versus a standard volume bar set. Standard volume bar set, when you get like Thinkorswim, it'll come up with only green candles because it was the dominant. You had more buys and sells in that period, that time period, that 5 minute period or the 1 minute period. And where my candles will show how many buys and sells you had in total. And it really kind of gives you a better idea within that period and gives you a better idea of where exactly how strong that green candle was. I mean, on a regular volume candle, you just have green because it ended up being, let's say you had 52 out of 50 purchases. 50, or out of 102 purchases, 52 of them were buys and 50 of them were sells. Well, a regular volume candle would only make that green. The whole thing would be green. You wouldn't have any indication of a red at all. Where mine will actually show how strong of that the leading direction was, whether it was buys or sells. So it will. This is a good example here where it's almost break even, but you can clearly see that this candle right here was more green than red. But the one next to it was clearly, obviously, more red than green. I mean, you just have a very little tiny buying that was going on here. So going into this next candle, when you start to see green, you have to look at your past pattern. I mean, you have two previous red candles here. So this is definitely not confirmation. Going into your next candle, though, this would be confirmation. You have this green candle, but at the same time, your trends are going down on the MACD. You have red in the MACD, so that's not my entry point. For me, my entry point is when this is turning green, this is turning red, this is green. There's not a high on the. It's not overbought. It's not oversold on the RSI. And you have a pattern of consistent, maybe past greens forming. So this was green more than red. This was green more than red. This was kind of halfies, but a lot of traders will realize that that's a potential pullback at a good entry point. And then we look for what is the strength. So the candle itself, there's buying pressure, but there was equal amount of selling pressure as well. But you do have the Heiken is turning blue. In my case, it's blue. That's just how I coded it: blue versus magenta. And then you're also over the 20 moving average, which is the dotted line. You cross this 200 moving average, which is the red dotted line. So those are all the things you're looking for. And I know it's a lot, but when you develop your strategy and you start practicing, preferably in a simulator first, you just start looking at that directly. You start practicing those strategies, going down that checklist, and as long as you stick to that checklist and you back test it, there's a higher probability that you'll have more green trades than red trades. I mean, you're always going to have red trades, but the practice is to get to 60, 70, 80, maybe 90% green trades. For me, I took 3 trades today. All 3 of them were green. That's just because I stick to my strategy every time. As Cameron Ross says, only play A+ setups based on your strategy. So. You had a couple things in here, so let me look at it here. So, how do you share is all I know? Okay, I saw that one. I bought when all the candles were mostly red. Well, then that's a downward trend. So if you're talking about volume candles, that's when you wouldn't want to buy. If you're trying to only do a day trade. Now, I mean, there's always that buying the dip, but you never know where that dip really is until you have confirmation in the first place. And that's where that confirmation is. I mean, you could say, let's look at this one right here. This is a dip, right? But is this a confirmation candle? Well, technically no, because it didn't get any higher than this candle. Well, what about the next one? Did it cross this level, this resist level of this candle? Well, it did. But you had a lot of selling pressure. That's what this candle means. I mean, it got up past it, but the close was lower than this candle. So is that technically a confirmation? No. Well, what about the next one? Well, now it's going the other way. Now it's going the other way. This would be your confirmation candle because the close ended up being higher than your previous high red candle. Across the board here. So when you see this open, I would be looking at things such as volume. Was this candle mostly green on the previous one? Yes, it was. Where are we down here on the MACD? Well, even though we're in the red on the bars, we're still shrinking going towards an uptrend. But the impulse is also still to the downside. And the MACD itself is also still to the downside. Where I would be looking to make an entry would be right at this green candle when it starts to form, and right here where it starts to, as we say, cluck, open up on the blue for the MACD. Because that shows a confirmation of potential trend. But even then, until my impulse changes, which is this one over here, that's where I would really be looking to start making an opening, because we got green MACD candles, we got now the blue trend of the MACD is going up, we got the impulse also supporting it, and then we're between the RSIs, we're not overbought and we're not oversold, so you could say we're above 50%, more than likely we're above 50% or above maybe 45, depending on where you have your midpoint, your zero line, and then you'd be looking at, okay, well, what were the previous candles like? Well, you had a high here, you had a high here. So in my eyes, this would be your first true move to an upward movement. That's how I play it. That's how my strategy is. And so I would look at this as my first pullback. And I would be looking at maybe making an entry as soon as it comes back to right about above this candle again where this resists, in hopes that it continues the progression and breaks it for continuation play. And so I'd look to make an entry here. I'd also still check. We're still between the RSIs. We're not overbought. We're not oversold. We're still trending up in both. We're still green on the MACD. My volume candles have been predominantly green the past couple of candles. So there's a good probability that there's a continuation play there. So that's where I'd be looking to make my entry right around 109. I make my entry. I get in. And then if we go a little further, oh, that's not what I wanted. Wrong thing. Oh, no. If we go a little further, this is the one I wanted. We got in right here, and we rode up. Now this did flush here, so hopefully you'd have a stop in place. You need zero out. And then I'd be looking at my next play. Okay, well, that flushed out. Maybe I'll look at playing here. And so I get in this candle, run it up. But as soon as I get in up in here, okay, I see this is a resistant level from previous, because I did technical analysis. I looked back in previous history, previous days, and found that is a support level or a resist level from another time period. Or another day. And so I marked it, so I know that this is going to be pushing it back down some. So as soon as I see this selling pressure, maybe that's the time I just, I take a quick scalp of, I got in only here, I rode it up to maybe here, and I just sold it because it wasn't progressing any further. It hit that resist, and it pushed it back down. You're green. It maybe have been a short play, but you're green. And I always say take your base hits over trying to just make home runs, because you try to make home runs, you'll lose every time. Well, not every time. Sometimes you might get lucky, but there's a higher probability you'll lose versus just making your base hits, taking your base hits, getting in, getting green, getting out. And as you can see here, these big flushing candles, if you would have continued to hold, you would have dropped back down, and you would have had to wait in hopes that it would rise back up. Sometimes it does, sometimes it doesn't. So, let's see. Beginner mistakes, I guess. Haha. That is true. That is very true. But that's why it takes a lot of dedication of just self-study. Where's my books at? Some of the books that I've gone through, as I mentioned, Ross Cameron. Let's just do that one. How to Day Trade. Great book. Read it. It'll teach you the ins and outs of what to look for. It'll talk about some stories from his time learning how to trade, some other traders he knows, mistakes he made early on, so you don't have to make those same mistakes. That's one. Another one is the only technical analysis book you'll ever need. I think that's what it says. Yeah, you'll ever need. This is a great book. Talks about those entries, looking for confirmation, riding the waves, meaning following the trend. Don't fight the trends because it's hard. It's easier to play the direction that the stock is going versus trying to guess when it's going to reverse. You can use technical analysis to try to help you with that estimation of a guess of when it will reverse, but there's no guarantee it'll reverse. Might as well just go with the trend. And then if the trend starts to change, you can get out, and usually you can get out for less of a loss than if you were trying to fight and try to find a reversal, and then it just flushes on you and continues on. The other one is Charting and Technical Analysis. This was another good book that I got. I enjoyed this one. Talks about how to do technical analysis, what you're looking for, and then of course you have your diagrams here. Let's move this on my shirt over here. All good reference materials to have nearby. Candlestick patterns, or different types of trading patterns. What you're looking for, things that mean a potential bull reversal, or a bear reversal, or confirmation of a direction potentially. Higher probability candles is really what they are, or patterns, higher probability patterns. So once you learn that base level information and you start putting it all together, you'll be able to identify it quicker. And that's why simulator practice works the best, because you can actually practice it in real time. Or you do paper trading, when the market is actually open, you use fake money and you just do simulator trading with the actual market being live. And so you're not losing money, you're not gaining anything except for just experience. So you're confirming your entries, you're confirming your exits. And Ross Cameron mentioned that quite a bit, is not enough people do simulator training and practice enough before they actually try to jump in the market and lose money. And you making the example of, I bought when all the candles were red would be a good example of not doing the simulator trading and learning those techniques first. I made that same mistake as well. But I think in some regard I was wise enough to not go in with a significant amount of funds. I kept my, we're talking minuscule, like dollars and pennies and cents is how much I was willing to risk on trades, just until I learned the processes and the strategy and developed my own strategy. But right now this week, out of all my trades, I've only had one red, which is good. Also, not over trading is good. We call it fear of missing out, or FOMO. Don't have FOMO. If your strategy, your A+ setup isn't there, don't try to force it. It's not going to happen. Look for something else. There are thousands of stocks out there. Of course, you want to find something that's moving with the volume and volatility, but one of the stocks of the day that's moving in the intraday will probably be close, or if not, soon to be at your setup, your A+ setup. So don't force the play. Wait for the play to set itself up, and then make your entry once you confirm your strategy and you do your checklist. So, never did. Okay, you go to work, man. Yeah, I'll be out there this weekend working on the boat. So hopefully, you check back in. Talk to your buddies about me. I'm trying to be more and more proactive and active on my Twitch, and I don't mind just chatting with people and kind of telling people how I set myself up, do my strategy. But at the same time, I'm not charging you for this stuff. There's people out there charging you. Eventually, I do want to kind of put together a group of the Salty crew that we can have kind of an interactive team, an interactive group, and kind of work with each other and try to set up, provide early notifications of things and talk to each other about our strategies. And something that works for another guy, something that I do may not work for you in the long run, but something that somebody else does may work for you. So that's kind of my concept, and slowly I'll start gaining more and more followers, and hopefully we'll get a lot more people involved and engaged, and it'll just grow as a community. That's the goal. So I appreciate that. So yeah, please pass the word around. I'm trying to be on at least every pre-market and post-market because, like you, going to work, I'm not quite at the point where I'm 100% able to just trade all day. I'm getting closer, though. Getting closer. I'm almost making just as much as I do on my full-time job. So very soon, very soon. And I don't mind doing that transition. I'd love just to be able to, and the goal is to sail and stock trade anywhere in the world. That's why I'm setting up the boat, and that's my next plan, is to be able to just do like Starlink, have that Starlink connection directly on my boat, and go to like Bermuda or the Bahamas or even Europe, do the transatlantic trip, but you still be able to stock trade every day. So that's my long-term goal. I hope everyone sets their own goal when it comes to trading, especially yourself. But get motivated and don't lose that momentum of motivation of education and learning. That's the biggest advice I can give you. Don't stop the motivation of learning, and don't try to jump and skip the steps necessary to learn. Because then you'll start losing actual funds. Do the simulator trading, do the paper trading, take your time, identify strategies, identify setups, find your niche. Don't be a repeat trader. Find your own niche of what works and play on that and strengthen it. That's all I could say. So, all right, I'm going to let you go to work. I'm actually going to head out to bed as well. So it was good talking to you. I appreciate you, and I'll see you next time, okay? Alrighty, let's shut this down. And we're out of here.